Welcome to Taking Stock, our weekly wrap of the market action this week. The Sensex rose on Monday, January 18th, led by Tata Consultancy Services after it announced quarterly results that beat analyst expectations. Other IT service providers followed suit. HDFC Bank and ICICI Bank also climbed after their shares were upgraded by Morgan Stanley. Shares fell the most in a month on Tuesday on concern that inflation could hinder the global economic recovery as central banks around the world consider hiking interest rates, challenging countries on how to balance growth and inflation. IT service providers dropped for the day. Tata Power, which is India's largest electricity generator outside of state-run companies, also fell, following a lower than expected third quarter profit after sales fell. The sensitive index fell on Wednesday. Oil and natural gas corporation slid after the government asked it to give state-run refiners a $762 million subsidy for losses from selling gasoline and diesel below cost, which raised concerns about the company's profitability. NTPC, India's largest power producer, gained after it announced plans to spend 250 billion rupees to build power plants to help decrease blackouts. Stocks fell for a third straight day on Thursday, with Larsen & Toubro leading the losses after a decline in sales for the quarter. ICICI Bank also slumped, even after posting a lower-than-expected drop in quarterly net profit. Despite reporting a 5.4% increase in December quarter profits that were in line with analyst expectations, Bharat Heavy Electricals also went down, along with overall markets. Markets closed sharply lower on Friday, below the 17,000 mark, following weak global cues after U.S. President Barack Obama proposed limits on trading practices of banks in the U.S. However, Reliance Industries, ITC, and Bharti Airtel's third quarter figures, which were in line with expectations, helped the markets cut losses. Top gainers were BHEL, ITC, Hero Honda, and Hindustan Unilever. Top losers included Tata Steel, Larsen & Toubro, DLF, Sun Pharma, and Jaiprakash Associates. Barring realty, all other sector indices ended the day in the red. To tell us more on what to expect from the markets, we have with us Jagannadham Thunuguntla of SMC Capital. So there's been a mixed bag of quarterly results this week. So what's been causing the downward trend in the markets?
Yeah, a couple of points. As you rightly said, the results have been mixed. I mean, the valuations in 2009 have stretched to that level, assuming that the Indian corporate is going to post fantastic results, which has happened. So understandably, the market got disappointed. As we discussed the last time also, now where the market is standing is macros will keep coming good, GDP and IIP numbers will be good, and in corporate results also should be fairly okay. However, the same enthusiasm may not be able to be translated into the capital markets because we are already so overvalued in 2009. Market has rallied 100% in 2009. By no stretch of imagination, we can expect that to happen in 2010.
Then what can we expect from the markets in the short term?
The worst case scenario can be as damaging as one can expect. So if we go flattish from here, that is a best case scenario. And also even the dollar carry trade unwinding is on the cards. If that actually plays out, then I think emerging markets will go through bouts of pressure. And for those long-term investors who are waiting in 2009 for the right entry valuations, for them, I'm sure it will give good entry valuations. I think if somebody who has waited last year without making investments and waiting for the good entry prices, in next 2 to 3 months, I think they should wait and enter as the market will keep giving valuation ranges.
And any sectors or stocks to watch out for?
Now, instead of sectors, I think better to concentrate on the corporates because even the good sectors can have bad companies. So it is very, very important to get the stock selection right with the corporate credentials and the good entry valuation. So as long as if the investors concentrate on these characteristics, I think in the next 2 to 3 years one should be able to make money. India is a great investment opportunity. If one sees in that angle, it should give good returns.
Okay, thanks for joining us. And that's all we have for you this week. Thanks for watching.